On today's episode,
I think what has helped us is the fact that we're obsessed with simplicity and transparency. And I always challenge our teams with, if you bring out a product, we need to be 20% better than the market, not 2% or 5%, because then it's extremely difficult to sell it.
welcome to SuiteTalk, an active share series that taps into the minds of top business leaders. I'm your host, Hugo Scott Gould. It is with great pleasure that I welcome a true visionary in the banking industry, Gerrie Fourie, the CEO of Capitec Bank. Gerrie embarked on his journey with Capitec in 2000 at a time when the company had fewer than 10 employees. His appointment as CEO in 2014 marked the beginning of a transformative era during which he played a pivotal role in establishing Capitec as South Africa's leading digital bank. Under his leadership, the client base has expanded fivefold from 5 million to almost 25 million clients. I'm honored to have him here to reflect on his extraordinary career. Gerrie, welcome to the show.
Thank you. Nice to be here, Hugo.
So could you tell us, not just about Capitec, but about Capitec's growth, which has been astonishing, really, for want of a better word?
Yeah, it's a long story. We started in 2000. We saw a big gap in personal banking. We believe banking is too complex and it's not transparent. And branches opening from 9 till 3:30 during the day, so it's not accessible. So what we went out and said, but if you look at the South African market in particular, and people that hasn't got maybe all the financial education or financial knowledge that they need to add, we need to make banking as simplistic and transparent as possible. And then we started saying, but how do we do it? And we actually looked at our fundamentals, which is affordability, accessibility, simplicity, and service. And from there, we started to really build the bank. I think our first 12 years was really about establishing a brand, because you don't establish a brand overnight. It's something that you build over time. And if you build a brand, then it's all about consistency, because that builds trust. And we built that for the first 12 years. Then we were starting to get bigger. And I think that's where the word culture comes in, because we realized how important culture is going to be, because you need to build an organization that becomes 200-300 years old. And we spend quite a lot of time on our culture, which is client-obsessed people and delivery. But that also brought in a new dimension, because we said, well, how's a small operator, how's a small business operating? He's obsessed with his client, he's got a massive amount of energy, and he takes ownership, he takes decisions. And we said, that is actually a CEO. So we said that every single person must be a CEO of the company and take ownership and accountability. And so it's not only myself, the CEO, but everyone is a CEO and really takes ownership and take decisions and challenge what needs to be done and what is best for our clients. And I think that to extend is the whole DNA of Capitec, is just the ownership of all our people, the accountability of all our people, and everyone is very focused on the client and is client obsessed. So it's a journey. I think to add to that is when we diversified and said, but we will need to be a one-stop shop. We can't only do banking. And that's where we actually looked at, value-added services, insurance, business banking, et cetera, adding that to our portfolio. So it's a long journey, but I think the culture and CEO is critical in our success.
Were you a bunch of entrepreneurs looking to do something entrepreneurial and you settled on banking, or you had knowledge of the banking industry and said, look, there's something that needs disrupting here. There's a bad product that needs to be replaced by a good product. So did you start with, hey, the banking industry is upside down, needs to change? Or was it, we're a bunch of entrepreneurial guys, where should we go and disrupt?
No, it was more, Michiel Leroux was the CEO of Boland Bank, and Rian took over from him, become a chairman. And they looked at banking and said, but banking is too complex and hasn't delivered on the needs of the clients. When Michiel phoned me and asked me to join, his whole vision was, how do we disrupt banking? How do we do banking differently? How do we make certain that there's value for our clients? So I think the important thing is he's got that vision. I think he put a very strong team together, and with that vision and strong team and our ability to be agile and really go up and do things differently, I think that was the result of what Capitec is today.
So you're clearly a very product-driven, client-driven business, which is great, but you've still got to have people find you and understand that you've got a good product and it's better. So how hard was that in the beginning? Because you're right there in the digital bank disruptors globally now. But when you started, the internet digital was much less of a thing. It was still quite physical. So how did people find you? How do they know that you had a great product that was doing?
Well, if you look at 2000, there was no digital, there was no apps, and it came, if you look at the iPhone, came in 2007, and apps really came in at about 11, 12. So, but we realized we need to have branches. So we said from the beginning, if we go into a particular area, we will dominate. I remember the first time we opened up branches in Belleville, we didn't open one branch, we opened 5. In the Transkei area, I came back and said, but there's no other banks, and we opened 20. So we believed in dominance in a particular area and make certain we've got the distribution. But then we said immediately, but a branch shouldn't be open from 9 till 3:30 like a typical bank. We must work retail hours. So we opened immediately from 8 to 5, and immediately we said, but 8 to 5 is not enough. Let's go 8 to 7. And some of our branches were open till 10 at night because we said we need to be available for our branches, for our staff, and we need to operate. And in 2013, 14, we brought out the app and become real digital. But the nice thing what the digital has done is we've taken basically all the transactions out of our branches, and 95% of our transactions is now done on the app because you can do it 24/7. And our branches is actually very strong selling capabilities, and they're selling into our client base. And that's helped us tremendously. I get a lot of the question, but why have you gone in this age still branches and digital? Is just that we've seen digital as performing very much transactional capabilities. But when you want to interact with a client, if you want to connect with a client, if you want to sell into a client, a branch is a critical part of our success.
And how do you know what clients want? Is it, well, look, here's the existing product and we can see the things that are wrong with it? Or is it a little bit of the sort of Steve Jobs, which is people didn't know they wanted an iPhone until there was one available? Like, do you just have good instincts, or are you working backwards from points of pain?
2 ways. Working backwards is critical. So whatever we do, we're working backwards. So we start with the client and working backwards. But spending a tremendous amount of time in the market, amount of time in the branches, talking to our consultants, talking to our clients. The first 12 years, I was basically Tuesday night out, Thursday night back. But really spending time in the market, understanding the flow, understanding the needs, talking to clients, be involved. And then I will come back and then give our IT people and say, we need to do X, Y, Z. It's really understanding the client and working with the client. And still today, working backwards for us, we look at the different segments of the market, different clients, and really trying to understand what they need, what they really want. I think what has helped us is the fact that we're obsessed with simplicity and transparency. And I always challenge our teams with, if you bring out a product, we need to be 20% better than the market, not 2% or 5%, because then it's extremely difficult to sell it. But you need to be, if I look at the 6 Ps, the typical marketing Ps, product, price, positioning, promotion, place, and people, how are you 20 to 25% better, that you can really think completely differently and be innovative designing products?
You say that you challenge yourselves to disrupt yourselves every 1 to 2 years. What does that really mean?
Well, you look at yourself. In the beginning, every 2-3 years, I would appoint a team of 10 to 15 very young people and say, if you got an outside company and you have to disrupt us, what would you do? And now what would you think is a competitor? We challenge ourselves the whole time. If I go into budgeting, if I go in pricing, if I go in a product, we think the whole time, how do we disrupt ourselves? I've seen quite a lot of companies that is making quite a comfortable profit, and then the opposition undercuts them. So you need to ask that question and say, but are you fair to the client? Are you fair to yourself? And if you have to cut your prices, cut your futures, so you need to disrupt yourself. You need to look at yourself and say, are you doing it in the best way for a particular client?
Has that got harder as you've got bigger, more successful? You can't help it, but incumbency creeps up on you, or you've got people who've got, they've made a lot of money through their share options, whatever. It just gets harder. Maybe you disagree with me. Please tell me if you do. It just gets harder to self-disrupt. It's easy to do when you're 5 years in, you're small, you're nimble, you're all hungry. 15 years in, 20 years in, how do you stay hungry? Is it harder to disrupt yourself?
You need to have that thinking mentality to disrupt yourself. I look at last year's budget process. We looked at our transactional fees, and we had 34 fees. And I challenged the team and said, but this is not simplistic. This is not transparent. This is not Capitec. our clients is not understanding it because we fall in the trap of the accountants say each product must make a 10% or 20% ROE and you price per product. And then we brought out the 1, 2, 3, 6, and 10 pricing strategies. So we've got 5 pricing points. It cost us 200-300 million, but we were quite happy with making that decision because it's the right decision, because it links back to our fundamentals of simplicity.
How do you think about risk, first of all? How do you define risk for your business?
Well, one of the interesting things is a retailer thinks client first and then risk. Banker thinks risk and then client. We believe we're retailers. So we first look at the client and then we look at the risk. I think your biggest challenge in banking is on the credit side because, and I'm not talking market risk and climate risk and all of that. I'm just talking pure operational risk. It's basically your IT systems, making certain that your IT systems are strong, stable, and can produce. And it's the one thing I've learned is if you don't upgrade your systems every 4 or 5 years, you create legacy and you're going to crash somewhere or it's not going to work. It's like a car. Every 4 or 5 years, you need to replace a car. IT systems is exactly the same. And then you're sitting with credit risk. And credit risk is it's a little bit more complex because you need to look at the economy, you need to look at what industries are performing, and then make decisions on that. So I think that's the 2 biggest one. But you need to start with the client, not with risk. The moment you start with risk, you're on the wrong foot.
I hear you. Can we talk about decision making? I want to talk about how you as an organization take decisions and how that's changed over time. And then I also want to talk about how you as an individual take decisions and how you've changed over time.
The one thing I spoke about the whole CEO principle, and that's one thing whenever I'm on a podium talking to our own staff, I hate committees because committees is where people hide and people don't want to make decisions because they hide between the other committee members. And I say our business owners must take decisions. And I said, if you make a decision, it's the wrong decision, that's fine. But if you make a decision, for me, what is critical is it's not best for you, it's not best for your department, but it's best for the company. And give me 2 or 3 reasons why you've made that decision. If the reasons are good, then it's fine. Then we correct it because we can't all make correct decisions. So it's as having that culture of making decisions because I can't make every single decision in the bank. And what typical big companies has done is they've created these layers of committees and delegation of authorities and things like that. But you need to have, we've only got 8 layers between myself and our consultants. It's how do you create and install that accountability and ownership that you need to take that through. I think from our side, when you were younger and you were just becoming a CEO, you're always uncertain because you had very strong people in your team. And as you get older, you got much more confident. But again, I'm saying I'm rather make a decision, go with it, and then if it's wrong, correct it as quickly as possible. I've seen many times people want to try and make a 100% decision. Decision is 80% there. Go, be quick in the market and be first in the market. So for me, decision making is critical to lead a business.
But do you feel you're more decisive now than 5 years ago individually?
I spent a lot of time in the past in the detail, understanding the detail, and then it was quite easier to make decisions. Now we're much bigger. You need to allow those people to understand the details. I've got a very simple philosophy. If I understand it, I'll let them go. If I don't understand it, I'll keep on asking questions till I fully understand it, or I will help to get to the right decisions if you don't understand it. So questioning, but not questioning a person, questioning the issue, the ball is for me critical because if you question that, you get to the right answers.
Can you talk a little bit about people, about hiring, how that's changed, what you feel your role is as a CEO in identifying, motivating, stretching, and rewarding talent? How do you think about the people side of things? Because I still maintain it's one of those things that no one's found a neat way of turning into academic literature. So therefore it's not expressly taught, but it's hugely important. I don't know if you agree with that statement.
People is everything. So if you look at our culture, it goes about the client, people, and then delivery. And you can do nothing. You can't deliver and your client needs if you haven't got people. So managing your people is critical. And, there's a massive amount set in the people side. It's appointing the right people, making certain you've got a culture fit, making certain you've defined the right leadership traits, remuneration, make certain that people is well remunerated and in line with your remuneration. Now, just to give you a baby, because this is like a 2-hour topic, but if you look at us, we've defined our culture and we've defined our leadership traits. So we've got 9 very specific leadership traits that we're looking for. And we're looking for psychometrical tests from senior to junior appointments, making certain that they will have the culture fit, that they will have the leadership traits, and that you will have proper interviews with bar raisers whereby it's not only the exec or the person where the person will be accounted for doing the interviews, but other people also doing the interviews to make certain we've got the right quality of person coming in. And then for me, remuneration is very important. I believe on your senior exec level, you need to have a long-term view. You need to be a shareholder. You need to have options that's coming through. So we encourage that very strongly, that you think like a shareholder. You don't think like a employee. So you've got a 6 months horizon on your options. And senior managers, we've got a three-year horizon, also with very strong share incentives that they think like a shareholder. And then your middle managers more on a 1-year incentive. So we've looked at our leadership traits. We've looked at our remuneration. We've looked at our teamwork, our team ethics. So yeah, I agree 100% with you. Without people and managing people properly, you'll never be successful. It's interesting. It's one of those things I've said a lot is that if you look at leadership, I think people make leadership too complicated because you've got all these very definitions. For me, leadership is all about the why. If you understand why you must do something, you will do it. And that why is mutual. It's from myself plus who's ever working for myself, because it's my job to make certain that he's crystal clear on why we have to do it and what is the benefits for the clients. And he must make certain that he understands also what he needs to be. If you get that why right, people are motivated and they know where they're going.
The companies always use psychometric tests, or that's something you've introduced?
We've started with psychometrical tests at our consultant level when we started the bank. We were very strict on interviews that we will do 2-layer or raise the bar interviews. But probably for the last 10 years, psychometrical tests has gone right through the organization. It's something the HR people has brought in, but it's something we embrace. It's really difficult to understand how people will always fit from an interview, how they will fit into your leadership traits, how they will fit into your culture. And I've learned over the time, I was more on a 60% psychometrical test. I'm now on a 100% psychometrical test, but not the psychometrical test just for the sake of doing it. A psychometrical test that's testing certain things that you really want to be tested to see if this person fits into your culture.
Doesn't that run the risk of everybody's the same?
No. Interestingly, we have my calls where you're looking for mavericks or you're looking for people that's different, that write the test. But people are always different. But it's important that they understand the leadership traits and the culture. They've got the same values. It's just so much easier then to manage.
When you look at the most successful colleagues you've worked with, what do you think are the common traits?
I think, coming back to your question of Nana, is everyone not the same? If you look at our leadership team, our exec team, they differ completely, but they're different personalities, different backgrounds, etc., etc. But I think they've all bought into the culture of our client first and making certain that we go that extra mile on our client. And all of them are passionate about the brand and are passionate of making a difference. Our long-term vision is to really make a meaningful difference in the client's day-to-day lives. And all of them has got that same burning ambition to make that meaningful difference.
How do you cope with difficult decisions around people? I don't know if it's happened, that people you work with for, say, some period of time, they've reached their limit, or they're just not performing at the level you need them to, or indeed, maybe they're just not trying hard enough. Are you pretty decisive? Are you know, how lenient are you?
I've learned over time that you need to be decisive. Interesting, I was 14, 15, I was in a Microsoft conference and we were about 15 CEOs talking about people, and Charlie Munger. We were talking quite a lot and what we've done, et cetera, et cetera. And I always remember he said, he wants to ask one question. And he said, what do you do with your loyal person that's been working 15, 20 years with yourselves, but the company has outgrown him? And it was dead silence, and nobody could give an answer. We've made a deliberate call to say that if that happens, you need to be decisive and you look after those people. You give them a proper package, but you cut the rope And 99% of the people we still see today, and they're still happy. They're very happy that we've made that call. But I've learned with people, you need to be open, you need to be direct, you need to talk about performance. If there's a difference between two people, it's normally not one thing, it's 5 or 10 small things that cause people to be unhappy. And that's where I'm a strong believer of openly having those robust and honest discussions. So for me, that is part of management, and we encourage that.
Are you you make a decision, it's clean, you move on, you don't think about it, or are you a revisit the decision? Do you have any kind of regret function? Are you a wake up at 2 a.m, or are you one of those people who can sleep well for 8 hours every night?
No. Sleep is always a precious commodity because you make decisions. And for me, it's always good to revisit that and just making certain that you've taken everything into consideration. And if I doubt, I will go back to whoever's the manager and we'll have those debates. But I like making those calls and go with it. I don't like you go 2, 3, 4, 5 months and you don't make decisions. I'm a firm believer, have robust debates, really try and understand the problem, make a decision, go with it, and then very clearly monitor what's happening with it. Because if you make the wrong decisions, then go back and tweak it, change it. I don't like procrastinate over a decision. You need to go, but you need to evaluate the whole time and say, have you made the right decision?
You're stepping down from being CEO. As you look back now, is it harder to be a CEO today than it was? I mean, you became CEO in 2014, but a decade ago, not that long ago, it was a different world in some ways. Do you think it's harder now to be a CEO? Just the scrutiny, the prevalence of social media, the transparency that's required to make a CEO has to be more vocal around perhaps broader social issues, and more is expected of a CEO, more is expected of a company and their role in society than perhaps it was a decade ago. Do you agree with any of those statements? Do you think it's harder now?
Yeah, for sure. If you just look at social media, and I'm not a big fan of social media because social media, there's no accountability. I believe if you want to say something, there must be accountability. But you've got, if you just look at what we had to handle in the last 5 years, you had COVID, you had Russia, Ukraine, you had what is happening with Trump. So the world is just moving much quicker and faster. Communication is much quicker and faster. So yeah, the pressure is small. So it is challenging, but that's where the whole world is going. And I think that's where you must embrace tools like AI, et cetera, to make yourself quicker and faster. And you need to be agile.
Great. Well, look, I want to say thank you very much for coming on the show. I appreciate it. It's always fascinating to hear how entrepreneurs become CEOs, build great companies. And I think you've really shared with us that. So, Gerrie, thanks a lot for coming on. Great to see you.
Thanks, Hugo. Thanks a lot.
Thank you for listening to today's episode of SuiteTalk. If you found this discussion inspiring and informative, be sure to subscribe to our podcast and leave us a review. Your feedback helps us bring you more engaging content and connect with top business leaders. Follow us on social media and visit our website for more episodes and content. Until next time, keep exploring, keep learning, and keep leading. This is Hugo Scott Hall, signing off from SuiteTalk.
This content is for informational and educational purposes only and is not intended as investment advice or a recommendation to buy or sell any security or to adopt any investment strategy. Investment advice and recommendations can be provided only after careful consideration of investors' objectives, guidelines, and restrictions. As of the date of this recording, William Blair Investment Management held positions in the company referenced in one or more of its investment strategies. References to specific companies are for illustrative purposes only and should not be construed as investment advice or a recommendation to buy or sell any security. The securities identified and described do not represent all of the securities purchased, sold, or recommended for client accounts. It should not be assumed that any investment in the companies referenced was or will be profitable. The views and opinions expressed are those of the speakers as of the date of this recording and are subject to change without notice as economic and market conditions dictate. It may not reflect the views and opinions of other investment teams within William Blair Investment Management. Factual information has been obtained from sources we believe to be reliable. but its accuracy, completeness, or interpretation cannot be guaranteed. Any discussion of particular topics is not meant to be comprehensive and may be subject to change. This material may include forecasts, estimates, outlooks, projections, and other forward-looking statements. Due to a variety of factors, actual events may differ significantly from those presented. Past performance is not indicative of future results. Investing involves risk, including the possible loss of principal. Any investment or strategy mentioned herein may be not suitable for every investor.